Hello, everybody. Happy Friday. This is Toni Turner, and welcome to the market now as of about 10:30 a.m. Eastern on Friday, April 22nd. U.S. stock indexes are lower this morning after poor quarterly reports from technology bellwethers, Microsoft and Alphabet, as we used to know as Google, outweighed gains from steadying oil prices. Microsoft today so far is the biggest drag on all three major indexes, and of course that would be the Dow, the S&P 500, and the NASDAQ. Crude oil, however, rose about 1% on signs of strong gasoline consumption here in the U.S. The S&P 500 has been inching so far in the last month or two toward its all-time high, helped by a rebound in oil, a very cautious Federal Reserve, and many companies beating softened expectations so far in this earnings season. Now let's go on and look at three charts that could help us decide what's going to happen in the market this week. First of all, we have, as we usually do, our chart of the S&P 500 SPDR, symbol SPY. This is the ETF that closely follows our S&P 500 benchmark index. As we look, and as I just said, the S&P 500 has been inching toward all-time highs, and this Wednesday it actually made a high of $210.92. And if we look left, we can see that this is actually, if I can draw a straight line, not sure I can draw it that straight, this actually made its way up to the December 1st high of $211. That would be about $21.10 on the S&P 500 itself. And we know that the S&P 500 made an all-time high in May of 2015. I believe that was 2137, but don't quote me on that exactly, but it was right around there. So at any rate, the S&P 500 in the last month, in the month of February, March, and certainly through April, these 3 months has rallied its way back up to these prior highs from 2015. That's very bullish. Now the question is, can it stay there, especially given earnings? We've had some really great earnings come in from the railroads, not so great earnings from the techs, some of them. So we've got about 2 more weeks left in this earnings season, and we'll have to see what this brings, plus, of course, any global reports coming in. So as of today, when I captured this chart, the SPY was trading at $208.99. This is approximately $20.89 on the S&P 500 itself. We can see here that it's trading above the rising 20-day moving average, the red line, the rising 50-day moving average, the green line, and of course the 200-day moving average, which is pretty flat. That is the black line on this chart. Now, as we see here, we're looking toward, if the SPY, S&P 500 can continue higher in the coming week, we might get a golden cross here. A golden cross means that the 50-day moving average will cross up and above the 200-day moving average. That's typically a very positive sign in the world of technical analysis. So let's hope that the golden cross happens, and let's hope that the S&P 500, the SPY, stays above its 20-day moving average and certainly its 250-day moving average. So we're doing very well here. Again, the SPY moved up into this prior resistance area. I talked to you a lot about this is an area of scared people and mad people, because if they bought up here back at the end of in the last quarter of 2015 and then witnessed this gigantic fall down here, probably about a 9–10% fall down to this 181 level, then these people these people who bought up here were pretty frightened. However, the SPY managed to absorb a lot of that supply if it was thrown at the market, and has marched its way all the way back up again here, as I said, to these highs around 210, 211. That is a very resilient stock market. Of course, low interest rates will do wonderful things for financial markets. Now, if we look down here, the only thing we need to be wary of here, and certainly we do need to be wary, is that the 14-day RSI here that we see on the middle scale, it is actually up in the overbought zone. 70 is right about here on this scale, and the RSI is right up at this 70 level. Any asset or stock that gets above the 70 level is considered to be overbought, and that's where the SPY is right now. So we will have to see if the SPY can maintain. The MACD here is above the zero line. That's positive. It is simply moving sideways. It is not moving higher. So it is not as impressed with the SPY continued moves higher as one might think it would be. So let's just keep all this at our elbow, these notions here. Let's maybe raise stops on our positions. Maybe if we have over 20% profits in some of our positions, we may want to take a little off the table here in case earnings become disappointing and the S&P moves lower. Okay, let's move on now to our next chart, which is a chart of the PowerShares US Dollar Index Bullish. I know that's a mouthful. This is an exchange-traded product. The symbol is UUP. This actually represents the U.S. dollar against a basket of international currencies. And this is actually easier to read probably for your purposes than it looks like right now. This is just simply a cautionary tale, a cautionary note that I wanted to put in here this morning. It's not being talked about very much, and I wish it were being talked about more on the media. We know the dollar has fallen here since the December highs of about 20, I'll call it 2610. And the strength of the U.S. dollar has fallen against other currencies. Now, that is very bullish for oil. It's very bullish for gold. It's very bullish for multinationals. Companies that sell their goods and services overseas. Having a low dollar is a good thing. It's just nothing goes up or down forever. The UUP here that represents the U.S. dollar is sitting on support. We can see it had a low back here in August of 2015 when the market fell so hard there. Now it's back down to that low. We can see that the UUP here has fallen to, in this case, an oversold position below or at 30 on the RSI. That means everybody is out of or short the UUP, which only means that it's got to reverse at some point and start higher. And indeed, while the UUP here has made a little tiny double bottom, the RSI has made a bullish divergence in that it has made a higher low here. We see the MACD, if you can see plotted over the volume spikes, the MACD line, the black line, is now slowly, gradually moving higher at this point. The MACD line is over its signal line, which is slightly bullish. So what does this mean to you? Okay, what this means to you is, your takeaway is, if the UUP moves higher in the upcoming week, and we do have the Fed announcement next week, the Fed is not expected to raise interest rates, but there will be some kind of notice there by the U.S. dollar as to what the Fed says. So if the UUP moves higher, please know that it can potentially pressure oil prices. It can potentially pressure gold prices, even more so than oil. And it can also pressure the Dow stocks, the multinationals. So this is kind of a little clue here, especially with gold and oil, especially with gold. If the UUP moves higher here, that could exert some pressure on those areas. Okay, our last chart for the day is the PowerShares Dynamic Media Portfolio, symbol PBS. We haven't looked at this in several weeks. By the way, our MOO, our PowerShares Agribusiness ETF did move higher last week after we looked at it. It made a nice little run so far. Anyway, this is the PowerShares Dynamic Media Portfolio. The agribusiness was Van Eck funds. It was not PowerShares, so please accept this correction. All right, we're looking at the PBS, the PowerShares Media Portfolio. We can see here that it has moved off of its February lows, made gains back up to this resistance point in January, and slowly and gradually moved above its 20-day moving average, its 50-day moving average, and as of today it looks like it could move above its 200-day moving average. When I captured this chart, it was at $24.91. The top components in this ETF are CBS, Time Warner, Disney, Omnicom, 21st Century Fox, companies like that. And we know Disney has made a break higher on an upgrade this past week. So what I'm seeing here again is the PBS at $24.91, just above the 200-day moving average. Going into the coming week, if the PBS can stay above the 200-day moving average, or at least above this rising 20-day moving average coming in at about 24.50, I believe that will be a positive thing. Of course, earnings in this industry group will matter too. We definitely, if we enter PBS, we want it to stay above its 50-day simple moving average. That's why I put this highlight here in red. If it moves down below the 50-day, I don't want it anymore. So we can look at PBS in incoming weeks and see if this is one ETF that can start to move higher. Okay, now on to next week's economic reports. But first, please join us this coming Monday online from 4:30 to 6 p.m. Eastern for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, not a problem. The recording of our session is available to all of our members a few minutes after the session ends. And now for the coming week's economic reports. Monday is new home sales. Tuesday we have durable goods, the Case-Shiller Real Estate Index, and consumer confidence. Wednesday we have pending home sales, crude inventories, and the all-important FOMC rate decision at 2 p.m. While we don't expect them to raise rates, the Federal Open Market Committee, we do expect them to make comments that will affect the market. Thursday, we have the gross domestic product and weekly jobless claims. Friday, we have PCE, core prices, Chicago PMI, and the Michigan sentiment. Also next week, hundreds of companies are announcing their earnings. These earnings can and will affect the indexes just as Microsoft and Google or Alphabet and Starbucks today have affected the indexes. So please stay tuned for those economic reports. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.